Those are the returns on your LICs, even less than that these days. FDs, people are quite happy putting their money for 5 years, 6 years, 7 years, What are the returns now? 6%, 7% a year. Those are the returns that are there. Even PPF yield has now come down to 7.9%. In fact, a primary reason why people are jumping towards the stock market is because the debt route is not attractive anymore. Your FDs, your PPF, they are all the debt routes. Earlier they used to give 10-12% a year, now they hardly give about 5-6% a year. That's why they are not very attractive. So people are going towards mutual funds, stocks, thinking they will get big growth there, they will get higher returns there. And since most people go there untrained, and they don't realize the amount of risk that those instruments are carrying, and untrained people will usually lose money into the stock market. So is there a method, is there a way? Yes, it is. Is it a shortcut? Is it a quick one? But the way you became a doctor, an engineer, the way you got your job, the way you are getting your salary, same way you can train yourself and start making money into the stock market. It will take about 6 months. Minimum 6 months training is required if you need to make money here. It's a great field, provided you know what to do it this way. Let's compare the various investment vehicles you have. Let's see what are the various investment vehicles you have. FD. FD is the most popular one, but the returns are so less. About 6% a year is where it is going. Very soon it will be 4% a year as we become developed. That is a normal trend. There's a rule called rule of 72. What is rule of 72? 72 divided by the rate of interest is the number of years in which your money will become double. So at 6% a year, 12, 6 is 72. It will take 12 years for your money to become double. That means in your whole career, you will get doubling maybe only 2 times. So your 1 lakh, 2 lakh, to about 4 lakh, at the most to about 5 lakh. That's why as a medium of creating wealth, it is not very attractive anymore. Other is real estate. Now, after demonetization, real estate is not a vehicle anymore basically. It has already gone down by about 20-25%. The cost of construction is about 3,000, 4,000 rupees per square foot. Builders sell it at about 15,000 rupees per square foot. Eventually, it has to come down to a realistic 20-30% profits. That means from here, you might see real estate coming down maybe about 20-30% more. In cities like Delhi, it is already down 60%. In Mumbai, we are down 25%. Pune is also on a downward trajectory. Other disadvantage with real estate is it was cash driven, cash is being taken out, and you cannot buy it in pieces. You cannot go to a builder and say, I want to buy the bedroom first, kitchen next week. So, and it's a very high investment right from the very start. Liquidity is very low. If you want to sell it, buyer is not available, you will not be able to sell it. So that's a disadvantage with the real estate. Stocks, they are one of the best vehicles that I have known. I'll be talking a lot about that. Mutual funds are good, but they have a very high expense into it. Somebody else is handling it. And when you are buying a mutual fund or a stock or giving money for portfolio building, they make you right. Stock market is subject to market risk. If a loss happens, you are responsible. Correct? So that's why, since their expense is very high, it's not a 2%, it is a 10%, 15%. That is expense of a mutual fund. And the way a mutual fund is designed is, it is designed to give you 3-4% more than the FD. Go and check any mutual fund in history, that's what the returns they give. 3 to 4% more than the FD. You won't get your bonuses, your dividends and your splits. So it's a good vehicle, but here also you are dependent on somebody else. You know, there are I think more than 1,000 mutual funds now, and the problem is same with stock. Which one do you buy? Which one is a good one? And in bull market anything works, but when the market becomes bear, even they don't perform. As you can see in last 1 year, index seems to be going up, but the mutual funds are mostly down. Gold doesn't deliver 3%, 4%. That's what gold has been able to give. Cash, putting a lot into your house is not even legal anymore. Right? So, like it or not, we need to understand the stock market properly. And the first paradigm shift that is required is that stock market is not a short-term thing, it is a long-term thing. In the stock market, you can do 4 types of trade. You can do intraday trading, swing trading, positional trading and long-term trading. I'll come back to these 4. That's what will make our base of learning, but let's cover a few slides first. What is the basic purpose when you come to the stock market? To generate incomes. What is income? Income is that money which is consistent in terms. Cheers, Tausif. You are standing. So, what is income? Income is that money which is consistent in terms of money and in terms of frequency, in terms of amounts and in terms of frequency. Your salary is you get it every month, you know how much you will get. In the stock market, you have the same choice. Why is your salary income? Because the probability of you getting that salary is almost a 98%. So the difference between just simple money and income is that money which has a probability of more than 90% that you will get that money. Only when those probabilities exist can it be classified as a. And in the stock market, till you are able to create those probabilities of getting money, you know, it will not be a fruitful exercise for you. Can it be made? Yes, it can be made. Let's start with a very, very simple method of, you know, managing your risk. Basic maths. I like mathematics. I'm an ideal. And one thing I know is this is the most exact language. You know, in any trade that you take, what are the 4 results that can happen? Big loss, a small loss, a small profit, and those are the 4 things that can happen. Out of the 4, which one is the most dangerous for you? Big loss. Now, the interesting thing is, what is your definition of big loss? You know, for some people, even 50% is not good enough. My definition of big loss, and as most of the traders in the world believe in, is that anything that is more than 10% of your capital, if you lose more than that, you enter into the arena of big loss. And the moment you are in big losses, it is very difficult to recover that money back. So, the base principle that of the stock market is, no matter what form of trading you are doing is, how many of you are freshers, guys, who have never done anything in the stock market? Raise your hand. Quite a few freshers. Okay. Thank you very much. Then I'll not use very, very technical terms. I'll keep it simple. Thanks. Let's say there is a stock which is priced at 100 rupees. Let's give a very simple example. In what direction can it go? It can go in both the directions. It can go up, it can go down. So if it goes up, let's say it is a stock, you make a profit. If it goes down, you make a loss. That means in a stock, by default, there is a possibility of unlimited profit and unlimited. This is by default, the base of a stock is you can have unlimited profit, you can have unlimited loss. But do you have unlimited time and do you have unlimited money? You have limited time and limited money. Which means with your limited time and your limited money, you will either get a limited profit or a limited loss. Let's make a very simple setup here. So I say, I keep a target for this. I say, I don't want unlimited profit. I am happy with a 10% profit. Whenever it will give me 10% profit, I will get out of the stock. So you put here 110. This is your planned profit. But there is a risk that it might also go down. There is no guarantee that it will go up only, it can go down also. So now the basic math says, if my loss is bigger than my profit, there is no point coming here. Which means my planned loss has to be less than the planned profit that I have. So I go down and I say, I will not have a loss more than 5 rupees. That if I am right, I will get out if I am getting 10 rupees, but if I am wrong, I will get out when I am wrong only by 5 rupees. So now, what is my reward in this case? My reward in this case is 10 rupees, my risk is 5 rupees, so my reward to risk ratio is 2 rupees. Let's say I take 10 trades like this in the whole month, 5 of them I achieve profits, the remaining 5 I achieve losses, hit rate of 50%. By the end of the month, will you make profit or will you make losses, guys? This is the basics of stock market. Everything else I'll talk from here is commentary. And stock market needs to be understood in 2 contexts. We will slowly go there, but never forget this. Anybody who forgets this will have losses in the stock market. Excuse me, I'm suffering from a mild cold today. So my voice is a little heavy. Rule of 72. This is another challenge you will face. Inflation is at about 6% a year in our country. So if an FD is growing at 6% a year, what is the effective growth of your money? 0. That means anything which is growing at about 6-7% a year will be useless for the growth of your money and financial freedom. So you have to look at vehicles which are growing at more than 20% a year so that can offset the inflation also. And that's where stock market comes in. You won't have any pension. There's another challenge you have. All those who are above 50 years of age, this is not going to come. And we are in nuclear families now. That means children will go away and you will still need money from 60 to 85. That's why you should be very proficient with intraday trading derivatives. Most people, the moment they heard the word futures, options, derivatives, they get very scared. But till they don't become your best friends, you will not even be able to build your long-term portfolios. How? I will be talking. These are the 4 equations of money. You need to come in equation number 4. Income minus saving is equal to expense. So here, when I talk of the word income, one income is your salary. That is the regular income that you get. Others should become the stock market. You should be earning with proper, what are the benchmarks you should have? The first benchmark is to create a long-term portfolio. I think that should be the need for everybody, to create a long-term portfolio, crore, 2 crore rupees. And most people see a crore, 2 crore, they look like a lot of money. But the power of portfolio building comes from the power of compounding. See here. Let's pick up a compound interest calculator. Let's say there is a gentleman who is 30 years of age now. How many of you are between 30 and 40? Raise your hands. Half the class. Great. Thank you. So here, let's say you start with a base amount of just 2 lakh rupees. You have 2 lakh rupees. You have 2 lakh rupees, and you are working on, let's say you develop a skill of creating 18% a month. I'm not talking 30%, 31% is Warren Buffett. We are not Warren Buffetts. Neither can we become one. Let's be realistic. We can't become Junjunwalas, we can't become Warren Buffett, but we can become wealthy. So, you say, I plan to have the skill of portfolio building by which I'm earning 18% a year, and I'm putting in this money for the next 20 years, let's say. A long term 20 years, and I'm also putting in an extra 10,000 rupees a month every month. There are 2 ways you have to approach the stock market. Number 1 is where you do not bother about where the market is. You don't check whether it is expensive or whether it's cheap. You keep on putting in money there regularly, month after month after month. But not just anywhere. You have to know where to put it. That you have to learn. You keep on putting that money month after month after month. Rupee cost averaging will take care of itself. When the market would be down, you will buy more stocks of the same stock. When the market will be up, you will buy less stocks of the same. And here, I calculate in 20 years, and this is what Albert Einstein called the, how much will that money become? That will become about 3 crore rupees. And this is basic mathematics that I'm talking about, exact language. Now, let's say you're not able to get 18%, you're able to get only a 15%. It will still be about 1.9 crore rupees, and I'm sure in 1.9 crore rupees you will be able to retire in about 2 years. And I'm talking 2 lakh rupees a month. What is the key here? The key here is continuously putting in the money. Do you know why people don't make money from the stock market mostly? It is because the money is continuously visible. The money is continuously visible. You have bought a stock. You put in 1 lakh rupees into it. And the moment you have bought a stock, you have 10 people giving you guidance. ये वाला नहीं, ये वाला ज़्यादा अच्छा है. इसमें मत डाल, तो उसमें डाल. Right? Everybody is an expert here. Everybody. And when the market is at peak, at top, even your newspaper guy and your milkman becomes an expert. So, this is the first problem, is that people don't have holding power into the stock market and they don't commit regular money into the stock market. So you have to work on a visible method and an invisible method. To do your intraday and swing trading, you have to time the market accurately. You have to be exactly timing it. That's how you will get the money. But to create your long-term wealth, no technical analysis is required. To do your intraday trading, only technical analysis is required. And you have to master both and combine the both. And another reason, there is one reason. How many of you have ever traded an option? Raise your hands. Option traders. How has your result been? Sorry? Mix. More like this. Right. This is the mix. I'll tell you the mix. Okay. This is mix. You know, why? Now, let's ask a very simple question. I need a black coffee though, so my throat is bad. Why don't intraday traders succeed in their profession? It's a very common thing that I've seen. Most of the intraday traders don't succeed in their profession. And the reason is, they don't have that money tied to anything else. This is a very simple and the most accurate explanation I have found is that an intraday trader who doesn't have his profit tied to something has no seriousness about those profits. What happens is, a guy is doing option trading. He makes a decent 20,000 rupees. That 20,000 rupees, neither will it be given to the wife, nor will it be put into a saving, nor it will. So what happens to that 20,000 rupees the next day? Back. The stock market says, how are you? Happy birthday. Take it back. And this is such a simple thing that you have to do. Now, people ask me, sir, where will my long-term portfolio be funded from? Should it be funded from my salary? And I said, no. Should it be funded from my savings? No, they are for your family. In fact, the only method by which your long-term portfolio should be funded should be from your short-term. You become a serious futures trader, commodity trader, forex trader, options trader, and you say, whatever I will earn from my intraday trading, 70% of that will fund my long-term portfolio. Just try this. We do this. More than 5,000 students, I live trade with them every day. We build portfolios together. And one thing I have known is, the moment you tie two things together, they become a serious affair. You say, for first 6 months, 1 year, maybe I'll put my savings into building my long-term portfolio. But the moment I become skilled enough, my long-term portfolio would be funded only from my stock portfolio, from my stock trading, the intraday trading, the futures trading and the options trading. And the loop that becomes after some time. Are you with me so far, guys? Fine. No promises in my class. I have no software to sell. I have no tip service. I don't handle anybody's money. And I don't promise you will become rich in 3 days. That doesn't happen in stock market. But it is a wonderful vehicle for both short-term incomes and long-term wealth. If you learn it properly and do it properly, all educated people here, I'm in Pune, you are the hub of education. And one thing I know is educated people can make money anywhere. That is what education does to us. So if that education is able to give you a salary, there is no reason the same education will not give you money into the stock market. You just haven't taken it seriously. That's all. Let's say I come here. How does the loop work? you start building your portfolio. Stock A, stock B, stock C, stock D, stock D. Let's say every month you are contributing some money here, 25,000 a month, 30,000, 10,000, whatever you are doing it here. Please put it there, thank you. And let's say this becomes a lakh of rupees of your stock portfolio. Lakh of rupees of your stock portfolio. Now, this portfolio of lakh rupees becomes the capital for your intraday trading. Most people don't know this. Now, these stocks every day with your broker, I'm not talking discounted brokers, regular brokers. You know, these stocks every day you can put as a collateral for your intraday trading and get a capital of about 70,000 rupees every day. When you are trading futures and options, you get a minimum leverage of about 10 times. That means your lakh rupees of portfolio every day can fund 7 lakh rupees of your intraday trading. And as this keeps on going up and up, your capital of your intraday trading will keep on going up and up. There's only one condition here. You cannot lose money. Because if you lose money, you have to sell your stocks. But if you can have this do loop running, and it is a learnable skill, it can be done. You know, as the years will grow, your portfolio will also grow and your trading skill will also grow. And it is not so difficult as people have told you. But it takes time. It is a skill. What is a skill? Skill is transfer of knowledge from conscious mind to subconscious mind with practice, practice and practice. So it takes some time before you reach those levels. You can all reach those levels. That is there. So, let's go to a few more slides. Is this clear to everybody? Yes. What is the key here? The key here is, let's look at this chart. This is the key. The key is, most of your growth comes in the end. It is an exponential chart. Most of your growth comes into the end. So here, look at the simple logic. The Nifty in 2000 was at 1000. Now it is at 11,800 somewhere. We are a growing economy. We have a nice political structure in place. We have all the resources we need. We are manufacturing properly. India will grow. That means in the next 20-30 years, if you have to create the long-term wealth, why do you have to time the market? There is no need. To create your long-term wealth, don't bother where the Nifty is going. Just pick up good stocks. Now, this is the key here. Picking up good stocks. Now, here you just can't put anything. What I've seen most people when they are looking at the portfolios, they think I just have to buy nice, good blue chip companies, keep on holding them for a long period of time, and I will become rich. Doesn't work like that. Let's pick up a few slides that we have. This is our index. Index is up. An index will always go up. Please remember, it will never come down. It will always go up. Nifty Beast, the ETF of Nifty, has got historical returns of 11% a year. You don't have to do anything, just keep on buying it. Yeah. Suzlon, down. Reliance, up. Arcom, down, up. Reliance, if you see, at least about 1200 is a little old chart. At 1200 rupees now, most people say, oh, Jio is doing very good, let me buy Reliance. What they don't know is, there is a loan worth crores of rupees they have taken from the banks. And if you do a nice fundamental analysis of Reliance, read their balance sheet and the business model, the proper valuation of Reliance at this very moment is about 700 rupees. Remember when the Reliance infrastructure was at about 700 rupees. I remember I was taking a class in Thane, Mumbai, and there we found the valuation of that to about 70 rupees. And most people were not able to believe it can come down to 70 rupees. Today I think it's at 30, 40 rupees. Eventually, in the long term, the stock will go towards its balance sheet. In the short term, it can go up and down, but in the long term, it will only go towards its balance sheet. If I tell people, hey guys, for your long-term portfolio, would you like to buy Tata Steel or Chaman Lal Shethiya? Which one will most of the people buy? Tata Steel. Trust me, everybody says Tata Steel. And why do they say Tata Steel? Because it's a brand, it is a name, and they believe if something is known, it is good. This is the biggest problem that happens in the stock market. People are not buying performance, they are buying familiarity. I'm familiar with this, so this must be good. Let's start with this one. Let's open. Let's say here. First your Tata Steel. Everybody can see on the back side. More people than expected today. Thank you very much for coming. So this is your Tata Steel. And this is Tata Steel here. Now look at Tata Steel. From 2008 onwards, if you would have put your money in Tata Steel, your 1,000 rupees would have become 504 rupees. You would have lost 50% of your capital and 8 years of your life. That 8 years you cannot get back. Now, if I look at Chaman Lal Shethiya, some people are wondering it is a company like that. It is. And I always purposely say this name because there are many examples like this, because you can't forget it. It's a very odd name. Chaman Lal Shethiya, they rice exporters. I remember I was taking a class in Andheri, Mumbai, when I was teaching them fundamental analysis. That is about 6-7 years ago I'm talking. And I was telling how to find undervalued stocks into the small cap categories. And we zeroed down on 3 stocks. One of them was Chaman Lal Shethiya. And one of the students came in the break. He said, "Sir, can't we have some other stock?" What will I tell when I go home? What did I buy? Chaman Lal Shethiya. I said, "You buy it." And then later on, he was fascinated with Chaman Lal Shethiya. So let's look at many stories like this. This is Chaman Lal Shethiya. You see, Chaman Lal Shethiya went from 5 rupees to 1,000 rupees. Then it had a 1:10 stock split. That means it became 100 rupees then, and now it is somewhere at about 54. So we could get a ride, not all the way here, but we could get a ride right from here almost till this level. So tell me, if you have to get that zing in your portfolio, which one is useful, Tata Steel or Chaman Lal Shethiya? Chaman Lal Shethiya. Unfortunately, nobody will tell you this. You have to learn how to find them yourself, and it is a learnable skill. We'll have the logic for it. Now, the key is you have to know when to enter. You also have to know when the story has become bad and it is not a good company anymore. Don't buy it now, please. Okay. So, every company passes through a stage where it is good, very good, fantastic, and the story tapers off. There are many stocks which are which will go to the fundamental side of the country. Like in our country, only 4% of the people use air conditioners. Right? And I'm sure in the coming 30-40 years, this will go to 70-80%. Everybody will use air conditioners. So you can just pick up a good air conditioning company, giving reasonable growths, and it will easily give you 20% per year plus for the next 30 years. This is the base logic of building a portfolio. I'm talking about the logic of, that's why you don't have to time it. You cannot time it. The whole logic of building a portfolio is that you are not buying a stock, you are buying a business. And that business should be on a growth curve for the next 10-20 years, which means it cannot be a blue chip company because it has already grown. What is the use of blue chip companies? The use of blue chip companies is they have derivatives associated with them. Derivatives are only with blue chip companies, large cap companies, 200 plus companies in which derivatives are there. They are used to trade derivatives. But for all the small cap companies, the mid cap companies, small businesses, there you look for gems. And once you have identified your gem, then you keep on putting money into it month after month, month after month, year after year. How many stocks should be in your portfolio? About 30. 30 is a good number. And every year, you need to rework on the portfolio. Every quarter a result comes. After 4 quarters, you check after the 30 stock, is there any stock that needs to be replaced with something else? So no need to time. In Pathfinders, we have a club called Investors Club where we regularly build our portfolios. So this is your need number 1. I never start with options or intraday trading. I always start, this is your need number 1, and it cannot be fulfilled by giving money to a mutual fund. It can only be done if you learn to do it yourself. It is not difficult. You just have to practice and learn it. It takes about 3-4 months to learn fundamental analysis. What is fundamental analysis? Fundamental analysis is the study of businesses. Studying their balance sheets, their business models, what sector they are into, and out of the 8,000 companies, which are the 30 companies in which you should be putting your money regularly, month after month after month. And if a stock at this moment has a price of 200 rupees and its valuation is 2,000 rupees, you don't have to time it at all. There's no need to time it. You just have to keep an eye on the valuation, that the valuation has not changed. What do you do every year? You check if the valuation has changed and the moment the valuation has changed, you get out. And youngs, people in 30s, 40s, you have the greatest chance of creating wealth. Once you know the fundamental analysis and what will fund your, fundamental analysis, that will be the technical analysis which will be funding. What are your choices? Let's look at your choices and let's look at the benchmarks. This is more or less money growing at 8% a year, let's say in your FD, in 25 years to 1 lakh will become only 8 lakhs. But growing at 18% per year, your 1 lakh will become 1 crore rupees. This is what you should be aiming at. And I can tell with confidence that each one of you sitting here can do it. Only one condition. दूसरों पे डिपेंडेंसी बंद कर दीजिए. स्टॉक मार्केट में शॉर्टकट ढूंढना बंद कर दीजिए. It is not a difficult field at all. It is a field of finance. You all know basic mathematics. You all know basic finance. It is just that you have to learn little extra there. And a simple comparative analysis, if you do, you can pick up good companies. So, this is 18% per year, and that's what you should become. Now, this is the equation. Live your life in this equation only. These are the 4 types of trading we have talked about. If you don't have big loss in the system, small losses and small profits will take care of each other, and what you will have in your system will be the big profits. Let's focus on this now. So what are your benchmarks? When you are building a stock portfolio, your benchmark is 2% a month. 2% per month, 24% per year achievable. Large cap blue chip companies, no. Small cap companies, small businesses, quality businesses. You might be having a company which is in the field of agriculture. I'll give you an example. The next revolution is going to come in the field of agriculture now. We have solar, that is the next one. We have electrical vehicle. You can pick up good companies there. Look at their balance sheets, understand them. Then you don't have to ask anybody. Keep on putting money in them. I have a friend in Sweden. His name is Johan. About a few years ago, I visited him. We were working in a company together. And I was teaching him some fundamental analysis. He is also very good. He picked up Tesla at that time. And he kept on putting money into Tesla. This was a whole new technology. And now he has money to buy a Tesla car from those shares. Why? Because he trusted his study, he trusted his analysis. So that's the first thing you have to look for. And this you can only do with stocks. You can't do this with anything else. So stock is not for intraday trading. Stock is not for intraday trading. Stocks are basically for building your portfolio. What are we targeting? 2% a month, 24% a year. And you want to build a portfolio of 1 crore rupees. Now, where will you get the money from? Where will you get the money from? What is the most dangerous day in 5 years to trade? Can anybody make a guess? I'll tell you. Election result day. Election result day is normally the most dangerous day to do any kind of trading into the market. Every election result day, I do intraday trading with my students. More than 500 students. With the grace of God, I've never lost any money on an election result day. Because that's the biggest challenge that you pick up. And I have one on let me pick up one. There are a lot of my videos here, you can go through. Yeah, live trading on election result day. This is a 6 hours of trading. I will think this is a cut video.
Points plus, and at least for about 1 to 2 hours, these are just lead.
I'll not run the full 18 minutes, you can watch it later. I'll just give you the base logic. We were doing intraday trading mostly with options. Options is one of my favorite products. If you can handle it, it can make you very rich. If you don't handle it, it can take your shirt away from you. So we were using options and the logic was very simple. Now let's look at the whole logic of this before I come here. Now I'm slowly going into intraday trading. This is the candlestick chart, guys. Here, let's see. The elections have happened, the ballot boxes are sealed, and the exit polls come. Right? This is the candle after the exit poll. Nifty went up 400 points. Nifty went up 400 points after the exit polls. And this is a day before the results are about to come. And on the election result day, when the market opened, my logic was very simple. You know, BJP winning is already factored into the price. That means BJP winning will not take the market up. It is already factored. Then Congress winning or a hung assembly is no good news. It will also take the market down. That means the only direction worth trading is the downward direction of the market, no matter what the result is. So this was our base logic right in the morning. I had about 500 plus traders trading with me, so the responsibility is big because they take my trades. And we said we will keep on waiting till we get the correct signal. That now the market has started giving the profits. The market has started giving the profits. So here, let me go back here on this.
And they will have to convert it to this fluctuation.
You can watch it on my YouTube channel.
After 12 the month, which you refrain the market, 2 days before market already went up. What is, I still have some providers doing right now. 12,000 rupees of profit, as you can see, that's what I was doing right now.
So you can see by the time it's 11 o'clock, I've already booked a profit of 12,000 rupees. What is the capital I was trading with? About 8 lakhs. 8 lakh rupees is my capital that I was trading with. And this is pure intraday trading where your timing has to be perfect. So far we talked about long-term wealth creation where you don't have to time it. Now I'm talking about perfect timing. So here,
and stop loss at 230 far of risk I have taken any trade Nifty guys.
Now, see here, now on the super trend indicators at about 11 o'clock plus, market gave me a sign that the correction has started. And we put in all of it. What was everybody doing? Buying the market. BJP has won. Results have come. Time to buy it. After the good news is out, there is no good news left. When you are an intraday trader, you have to be very sharp. And it is, why? Because when you are doing intraday trading, let's understand, what are the products you are working with? You are working with derivatives. Now, let's go to a different field altogether. Let's say 200 to 202. How much has percentage wise has the price gone up? 1%. So for a stock, I'll make it a little bigger. For a stock, the movement is 1%. But if you are trading a stock future, a stock future has got a property called leverage. Means you can buy more by paying less. When you are buying a stock, you are buying the house. But when you're buying a stock future, you are renting the house. When you rent, you don't pay the full money, na? You pay a fraction of a money. And because of that, it has got a leverage. For example, to buy 10 lakh rupees, if I pay only 1 lakh rupees, I have a leverage of 10. 10 times is my leverage. So here, in the stock future, my profit would be 10% on my capital. Would be 10% on my capital. And if I am trading an option, in an option, the leverage can be as high as 50 to 100 times because of the property of the product. The profit can be 50%. Now this is on the positive side. When everything is going according to you. Everything is going according to you on this one here. So, many of my introductories are available on my YouTube. You can watch them there. Not an issue. If you want to take a picture, it's fine with me. But they are available. So here, now, what if it goes down minus 1%, 198. This one will lose 1%. This one can still make a 10%. This can still make a 50%. And this is a mystery for most of the people. Why? Because stock is a unidirectional product. The property of a stock is it can only give you money when the price is going up. And you will lose money into it when the price is going down. Most people know only stocks. A husband trading in stocks for the whole day, 3:30 the market closes, husband comes home, just by looking at the face of the husband, the wife can tell whether the market went up or the market. Why? He doesn't know how to trade the derivatives. We have to know the right product. When you are coming into the market, you have to know what to buy, when to buy, how much to buy, when to get in, when to get out. And it is a perfect science, the way anything else is. The only difference between a debt market and the stock market is, and this is a very important difference to understand, is that when you are going on a debt market, what is a debt market? Your FDs, your PPFs, your Kisan Vikas Patra, your government bonds, your GSEC securities, they are all debt. They work on certainty. They work on certainty. If the bank has promised you 7% a year FD rate is certain. It cannot go up, it cannot go down, you will get it guaranteed. But when you are coming to the equities, the stocks, you are only working on probability. Please remember, only working on probability. There is no certainty. If you want guaranteed money, don't come to the stock market. This is not the place for you. And because it is working on probabilities, that's why the returns can be much higher. Because when you want certainties from debt market, no skill is required from you. Your signature has to be right, that's all. But when you are going into the arena of probabilities, the guy with a higher level of skill will have the higher probability. So you are in the game of probabilities. And when you are coming to intraday trading, what is the net profit you have to catch per month? 1%. And this is what makes it so motivating. You only have to catch a net 1% profit of a stock or an index per month. And since the leverage is 10 times, you will get a net 10% per month. So this is the benchmark for intraday and swing trading, 10%. There are options that move 50% in a day. Let's pick up a small example. This one, let me finish this. Okay, so this is where we got our entry, at about 11. So what were we doing from 9 o'clock to 11 o'clock? We were just waiting. We were not doing any trading. I had some directional neutral trades on. They gave me about 12,000 rupees by that time. We were just waiting. In intraday trading, your key is patience and exit entries. You cannot just come. Most people, they come near the market and they say, oh, kuch to karna hai, let me buy something. No. If you don't get the trade for the whole day, you don't trade. If you get 5 entries on the same day, you take all 5 entries. Okay, so we got this entry, a very simple method, and the market started moving in our direction. And what was the target I had here? And target was very simple. I'm trying to keep my chart reading very simple here. I'm not making it very complicated. Where did the market started rising? From here. This was the gap up. So this was the natural target. That whenever the price will reach this level, the gap would have filled and I will get up. So when you are doing intraday trading, keys. Now this is very important. The key is, there are a lot of live trading videos you can watch later on my YouTube channel. The key is, after you have entered a trade, you cannot plan to be a winner. You have to be a winner before you enter the trade. If your trade is not a winner before you enter it, it can never be a winner after you enter. And this is the biggest mistake intraday traders do. They don't take winner trades only. I teach the students, spend 90% of the time, finding your trades. Only 10% of the time is required to execute the trades. Execution is hardly a skill. You take your entry, you put your target, you put your stop loss, done. Not much is to be done there on this one. But here in this, let's go in this further market. And this is the key here. In the trading, I was working on a risk of 28,000 rupees, and by about 1 o'clock, I had already booked a profit of 27,000 rupees. And the key is, how much risk can you reduce? Sorry, these are little technical terms now, I'll avoid them. If I go further, now here, this is it. So my target is achieved now. You can see my target is, where did we enter? We entered here, in the market. So I am not deciding when I will enter. I am allowing the market to decide when I will enter. And I am allowing the market to tell me when I should exit. Trade the trend. Trend is your friend till it bends at the end. You can't beat the market, don't even try. It's not possible. What is the stock market? Stock market is the collective intelligence of crores and crores of people all over the world trading at the same time. It's impossible to beat it. So what do you have to do when you have to become successful intraday traders? You have to learn how to follow the market. To find out in what direction is it going and where do you have to go it. And now here, my target is achieved. It's very important to get up. Exit has a 75% importance. Entry has only 25% importance in intraday trading. Most people focus too much on entries. The magic is always in the exits. So here, by this time here, or by 8 lakh rupees, I had booked a profit of about 54,000 rupees. So, what is the percentage profit I have? On 8 lakh rupees, 1% is 8,000 rupees. 8 5s are 40, 8 6. 6% I had made. And now, from here onwards, my job is not to increase my risk, but to reduce my risk. So out of the 54,000 rupees, I said 40,000 is for my portfolio now. 40,000 is for my portfolio now. And the remaining I will use to work on risk if I can increase. By the end of the day, you can watch the video later, I finished with a profit of about 66,000 rupees. And on every major day, like budget day, I will trade now with my traders. Every day I trade with them. And this intraday trading, why does it become successful? It becomes successful because it is tied to my long-term goal. I cannot create long-term wealth if I do not succeed in my short-term trade. Please understand, when our vision becomes bigger, your vision should not only be to make yourself financially free. Why not create a level of skill in yourself that you can pass on to your next generation? Isn't it worth it? Jobs are going down. Salaries are not going up. Salaries are going down. Pink slips have become common now. And in an age of automation, no matter what everybody says, jobs won't be very attractive in the times to come. So have one more skill that you can use yourself and also use it, to give it to your children. Can somebody tell me who is Howard Buffett? Any idea? No? He is Warren Buffett's son. Everybody knows Warren Buffett. Howard Buffett is Warren Buffett's son, and he is not into stock market. He doesn't do any job. When he was 18 years of age, his father gave him a few $1 billion. That's good to have, a few $1 billion. His father gave me and say, do whatever you want for the betterment of humanity. He has written some wonderful books, Howard Buffett. So he said, I will go in the field of biological engineering, genetics, agriculture. And now he works, he is an authority on that field, on creating more food grains in the world. Amazing. Why could he do that? क्योंकि उसको ये टेंशन नहीं था कि 25 साल में जॉब किधर मिलेगी. Right? His father made him financially free. Why don't we have that? In any case, our children are our lifeline around us. We normally think of how will they get a job. Why not create a level of skill among ourselves where we can pass it on to our next generation? That way we become more motivated. When do we become successful in a field? We become successful in a field only when we have a bigger cause associated. And one thing is for sure, in the end, in the stock market, you will be asked only one thing: whether you are able to make profits or whether you made it from Tata or Bata. It doesn't matter as long as with the profits in the home, you can bring the atta. So take it seriously, it's a great field. Now, I have an online trading room in which I trade every morning for 2 hours with my traders. And I sit there with a capital of about 10 lakh rupees. If you want to create a lakh rupees a month of income from intraday and swing trading, about 10 lakh rupees of capital would be required. Who will fail? Those who sit with 50,000 rupees and they want to make 50,000 rupees every day. It doesn't work. You need some business. You will require the capital. Let's check out. Do I make money every day? No. But I work on pro bono. Let's see. Like yesterday, day before yesterday, Friday, I was trading and I could only make 356 rupees on my 10 lakh rupees. Day before that, I could make a 16,000 rupees primarily trading options there. Now, what is my benchmark? On a a 10 lakh rupees, if I say I'll make 1 lakh rupees every day, it is not going to work out. I target 1% net, per day. If I can make 1% net per day in 2 days, that means if one day I can make a 1.5% or a 2%, other day if I lose 0.5%, 1%, I have made my 1 day. So I cannot get a big profit every day. So if you see here, every trade is locked. Some days don't work out and you have to book your losses. Here is a loss of 11,000 rupees. Now this is where the challenge comes. When an intraday trader is in losses, he cannot book his losses. That's his biggest problem. Because for him, loss means failure. And he cannot accept the failure and he hopes to recover the loss. And in the process, the small loss becomes a big loss. Has it happened to you guys? To many of you, it has happened. Now the first thing that I teach, and that is what my mentors have taught me, is whatever target is achieved, profit target or loss target, you have to get out. The rule of intraday trading is the trade cannot go to the next day. होता क्या है, इंट्राडे से शुरू किया, फिर वो स्विंग हो गया, फिर पोर्टफोलियो बन गया. Because losses can't allow losses. Once you allow big losses to creep in your system, you will waste all your time just trying to recover those losses. So here, by the end of the day, market is telling me, hey, today it was not your day. I say, thank you very much, ma'am. I booked my loss, I get out. Okay. So, then this is what happened. Let me open the log for it. We log it regularly. Let's see here. 356 rupees, 16,000, 11,000, 4,900, 5,000. And you just see this small money. Like I had this 10 days of winning streak continuously, which gave me 64,000 rupees on my 10 lakh rupees. And next day I lost 11,000 rupees. I don't mind it at all. Because net I have still made a 50,000 rupees. And now I have a 16,000, I have a 356. And if you see, this is how the cycle continues. There are profits days, there are loss days. But as long as the intraday trading, the logic is you're dealing with derivatives. They are very risky. Half an hour extra and you're gone. So you have to be very exact in your entries and exit. Before you enter the trade, on a piece of paper, it should be absolutely clear to you what is your profit target, what is your loss target. On a piece of paper. At the moment that happens, you have to be out. If that happens, then these kind of results come. And what happens sometimes, the market will give you very big profits also. 20,000, 40,000, 50,000, but that is once in a while, not every day. So here, if I go down, now this is the key here, like this month so far, I made a 9.2%, 19%, 13%, a 4% loss, 5% profits and so on a 10 lakh. Now what will I do with this money? Yeah, what will I do with this money, guys? Yes, this is the money I will use to build my portfolio. My capital I keep 10 lakhs. The remaining money I'm shifting towards my portfolio. So what am I making my portfolio with? Profit money. There are two products that are supposed to be built or done only with profit money. One is your long-term portfolio and second is options trading. It's supposed to be done only with the profit. And this is the potential. So the potential is not only in our skill. The potential comes because of the inherent property of the market, where you are dealing with products which have high differential movement. Like an option, if you see here, let's give an example recently. Like yesterday, Yes Bank went down 3.25%. In a stock, you would have lost money. If you are holding a stock, you would have lost 3. If I go here, let's add Yes Bank. Now in Yes Bank, I look at Yes Bank in the derivatives, and I'm looking at a put option of, let's say, 110. So when Yes Bank went down 3%, the put option went up 26%. This is the potential that is there. Will you able to catch the full 26%? Forget it. Not possible. What is your target? Now this is another thing. When you're doing intraday trading, you only want to catch 25% of the move. 100% not possible. On a hindsight, it is very easy to say, yahan shuru hua, idhar khatam hua. No. But in reality, you will be able to catch 25 to 30% of the move with practice. And if you are able to catch a 25% move of a stock, and you are doing it in futures and options with proper trading, proper skill, proper timing, you will be able to make about 10% a month on your capital. And this market is becoming very mature. Most of you have not traded it, as I feel it's a learnable market, which can be worked on. And options I love as a product, because in an option, the advantage is your losses are limited and your profits are, so that even if you are wrong, you cannot lose more than a certain amount of, but it moves very fast. So your timing has to be very, very accurate there.
Excuse me. Yes. Technically, how did you catch this script?
Sir, that comes later. But I'll show you one. This is my website. I write a blog regularly. So I can read that for you from my blog that I wrote a few days ago. Is Yes Bank a good buy? Right? That was after Mr. Rana's exit. Yes Bank has continuously gone down, breaking one level after another, and is currently at 110 on 26 May 19. There is a 15% mismatch between the balance sheet and the technicals, giving it a target of 130. Why, when bad news comes, the stock can continue to slide. The monthly double bottom for this stock is around 60 rupees. It's already touched a low of 90. For a patient investor, 75 rupees is a good price to buy. But then, this is my analysis. It is not your analysis. Buy only your own, and that's when you will get the best. Have I answered you, sir? Let's go a little. So what are your choices for intraday? Take your intraday trading very seriously. It's a great opportunity to make money. Good intraday traders in India are missing because most people don't do it with a discipline. You don't require a high level of skill here. You only require discipline. That's one thing I always say. And you don't need to miss your office to do it. Most people think to do intraday trading, they have to sit in front of the computer for the whole day. That is not true. I see a lot of people for the whole day looking at the screen, the candlestick pattern like this. As if by looking, the candle will become bigger. By being near the market for the whole day, you are only inviting losses. You will unnecessarily become, let's take this with an example. Let's say I'll pick up any stock, let's say Glenmark Pharma. We're trading it in our trading room. Now Glenmark Pharma is at 443. It is oversold almost on all the indicators. It's oversold on RSI, MACD, Bollinger, divergence, whatever you say. It has a candlestick pattern, blah, 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 whatever all technicals say, it is oversold. So, I look at Glenmark Pharma chart and I say, okay, I open Glenmark Pharma. And I decide Glenmark Pharma, based on my analysis on various parameters, is a good buy at 435 rupees. Is a good buy at 435 rupees, but it is of, so what I can do here is, I can just take my entry, you can say, I'll buy Glenmark Pharma when it is at 435 rupees, I'll put a stop loss of, let's say, 15 rupees on it, roughly here, and I will exit it once it reaches this target here. So now I have put my entry exit. This is for demonstration, guys, don't take it tomorrow. I'm just picking up a couple for you. Because in stock market everything becomes a tip, So here now on this one, let's say this will be a swing trade, because Glenmark Pharma won't go from 443 to 516 in one day, and I don't know whether 435 will come tomorrow or day after tomorrow, but I've decided on my level, so I can decide here, I say I want to buy 100 Glenmark Pharma, at a price of, let's say, 435 when it comes there. My stop loss is at 420. I will get out at 570, and I want my stop loss to be put into the system every day. So I don't have to bother about putting my stop loss every day. And I can even go one step further in this, where I can say start trading it when the market price reaches 460. Now my physical presence is not required. Tomorrow whether I am near the market or not doesn't matter. In fact, my being near the market will just make me unnecessarily emotional. That's why and this is a surprise for most of the people, the best intraday trading is done when you are not near the market. That's where you will get your best results. You need to look at it only once or twice in a day, that you can do during your lunch breaks and your tea breaks. And these days with mobile phones available, everything is available on the mobile phone for your tracking. So it is not your execution that is important, that is automatic now. It is your analysis that is important. Because if your analysis is right, your levels are right, you will make money. If your levels are wrong, you will lose money. But what do you have to do? You just have to keep on finding your levels and keep on putting my price alerts into the system. And look at a very simple logic. I'm analyzing every night. I give 1 hour to find my trades, and I keep on putting them into my price alerts. The moment I have 50 price alerts into my system, basic probability says I will get 1 trade per day automatically. You can just keep on automatically putting your trades into the system. Intraday trading, you'll be surprised to know, is one of the most effective, most profitable and the easiest form of trading. If you don't, are there for the world. For people who are near the market for the whole day, for them it is a terror. Happens? मैंने देखा वो ऑफिस में लोग छुप छुप के भी देख रहे होते स्टॉक मार्केट. In TCS they put scanners in the washroom now in Mumbai because they found people going inside and trading stock market. So it's not required. It's not required. Keep two things in mind. Number one, you come here to create long-term wealth. So be very focused that you have to put in money every month for your long-term portfolio. First, I will teach you fundamental analysis in detail. This is the key. And this take 2-3 months to learn. And then after that, your financial freedom is in your own hands. And you don't have to monitor it continuously, no need. Just keep on putting it here, and if you look at the market, market goes up, market goes down. There's no need to time it. When the price will be down, you will get more. When the price will be up, you will get a little less. But overall, you will make good money here. And make sure your long-term portfolio is funded by your short-term trade. In the start, maybe your savings a little, your from salary a little, but you should have the commitment that after 6 months to 1 year, it will be my portfolio that will fund my short-term trading, and it will be my short-term trading that will fund my portfolio. This is how trading needs to be done in a proper manner that we are looking at. When you will go out, after my session, when you will go out, beware. You will find people down. In every class of mine all over India they come, who will be selling you a course, a cheap course, a 5,000 course, a 10,000 course, where they'll say, no need to spend a lot of time, I have this method, you just learn that and you will become great. Please don't fall prey to it. And those who are sitting here who plan to do it, kindly don't do it. Don't spoil others' time on this one, because trading is a solo journey. You cannot cut it. You cannot say, I will learn it in 2 days. It is not possible. You cannot become an engineer in 4 days by reading books. जितना समय लगता है, उतना समय. But if you learn it properly, this is a great time to start building your portfolio. Why? I'll show you. I told you I'll show you that filter. Now, if I'm going here, let's say I open a scan. Tasif, put it on the other resolution. This one is not giving me another one, which my screens become normal. Can you do that, please? So what I'll do is I'll filter now the stocks that we have. How many are bullish right now? How many are bearish? So that we can get an idea. Right now, are we in a bull market or are we in a bear market? Are we in a bull market? Are we in a bear market? Here the display will become a recommended one. Not this one, recommended. Yeah. Fine. Done? Open. You can all see it? My screen has become a little better now. So I go here. Now, let's first learn what I will do. This is the chart of the market. This is the daily chart of the market. And we see market goes up, market goes down. If I want to see the yearly trend of the market, I add a 200-day moving average. So if the price is above the 200-day moving average, it is bullish. If it is below it, it is bearish. Now let me do a filter on this. A new filter. So let's look at bull or bear. Let's say the last traded price is greater than EMA 200, exponential moving average 200. Okay. Add to grid and I say save and scan. How many stocks do we get? We get 407 stocks. That means 407 stocks are bullish, which are above the 200-day moving average. And if I go here and say last traded price is less than 200 EMA, now how many are there? 1,205. So what market are we in? We are in a bear market. So no wonder your mutual funds are not performing. No wonder your portfolio is down. Because that Nifty is just an eyewash. Because what is it representing? It is representing only 50 stocks. Out of which 10 are 54% weightage. Your stocks that have gone down belong here. That's why the coming 3-4 months is a great time to start building your portfolio. Because Nifty is never going to come down and crash. That's not going to happen. Forget it. Please delink your index and your stocks now. They are not linked anymore. That linking is gone years ago. So this is the time when you have 1,200 stocks which are down by more than 50%, giving you a great opportunity to start building your portfolio. So out of these 1,200 stocks, you have to learn fundamental analysis and find which are the 30 stocks which you have to start picking up and working. And this is what I teach. This is what I do. And once you do that, then you keep on putting your money month after month in them. Every 1 year, you balance your portfolio. You work on it again. Every 3 years, you rebalance it. How do you rebalance it? Let's say right now, your age is 30 years. 70% of your money should be in equity. 30% should be in debt. Basic rule of portfolio building. After 3 years, your portfolio has grown and gone up. So the balance has shifted that 80% has become equity and 20% has become debt. So what will you do? You will take out 10% from the equity and put it in the... It's a very scientific method. I've taught it to thousands of people. They practice, they build their portfolios. But not by being dependent on anybody. That is what I always say. I'm a professor, I teach, I'm a trader, I trade. And one thing I know is, finance is a field in which all of us should be good. Whether you're 20, 30, 40, 50, doesn't matter. You have to start now. And I also recommend that you have your family in confidence, because they will be your biggest support here. Make sure after you have learned, teach it to the wife, but to your own wife only. Teach it to your children. When I started learning stock market, It was difficult in the start. I'll share my story brief after some time. But still in India, most people have this problem that people around think stock market is gambling. Happens. Even your own family members might think, because most people don't do it scientifically. And how does this market operate? For one person to make money, another has to lose money. This is how this market is designed. It is a win-lose model. It reflects life. And the person with skill will make money from the person without the skill. And you have to become skilled here on this one. Index futures, you can trade options, you can trade commodity, you can trade forex. Even international forex has come in India now. I teach all of this because till you don't master derivatives, you cannot fund your portfolios. Remember, that's why in derivative trading you have to acquire a level of skill where you don't lose money. And it is mathematical. You can't be right 90% of the time, it is impossible. Anybody who says I'm 90% right in the stock market, wo jhoot bolte hain. If you are able to achieve a 70% success rate here, you are doing a brilliant job here. 70% is brilliant. Okay guys, let me introduce myself in brief. My name is Yogeshwar Sir. I'm a civil engineer by profession. I've done my MTech from IIT. My international certification in management from South America, Peru. And my advanced courses in trading is from Pristine Academy of USA and other places. And I'm not from a trading background. In fact, when I got selected for my IIT, my father gave me the fatherly advice. It said, son, stay away from bad habits like smoking, drinking, drugs, stock markets. Others I knew, I still don't do any of them. Last one I didn't. So I asked, Dad, what is this stock market? And he said, I don't know, but some sort of gambling. My friend went there and he lost money. My father is a scientist. Now 83, retired. Enjoying his pension. This Lifebuoy soap of Hindustan Liver, he is the inventor of this one. And many other inventions in his name. These days you have this organic fuel that is coming in aeroplanes. 10% is being mixed from Indian Institute of Petroleum. He is of the same team from IIP there. He is part of the team that did it. And he had this firm belief, we are middle class people. We work hard. We get our engineering. I had only two choices when I passed my 10th. Will you become a doctor or engineer? And I still remember I said, I don't want to become a doctor. He said, fine, it is decided, you will become an engineer. We had very less choices at that time. So when I went into my engineering field, I had in the back of mind that stock market means gambling. I had no reason to disbelieve him. So till the age of 38, I had nothing to do with stock market. I didn't knew it existed. The moment somebody said, I thought it was gambling. My way of saving was FDs. Kisan Vikas Patra, PP. But that's what I was told. That is what we did. Save 30% of your salary, put it into PP, put it into FDs. That's what I was doing. So I did my engineering. I was a scientist with Government of India for a few years, working on landslides. Then I got selected by Skanska, Swedish multinational, and I was involved in hydropower projects in Sri Lanka, Sweden, Norway, and my last project was in Peru in South America. When I was in Sri Lanka working on the Kukaliganga hydropower project, that's when I was introduced to the field of stock market accidentally. I met a full-time professional trader from Sweden. We became very good friends. But when I asked him, what do you do for a profession? He said, I am a professional trader. I trade commodities and forex. So I didn't say, but in the mind I had, gambler. So after a few weeks he said, you don't talk much about your profession, about my profession. What is the problem? I said, no, you don't have a good profession. He said, what do you mean I don't have a good profession? I'm a professional trader. I said, that's gambling. He said, who told you? I said, my dad told me. Who told your dad? I said, I have no idea. Normally in our life, we keep on carrying the same paradigms till somebody breaks. So for most of the people, you sitting here, the challenge would not be whether you can make money here or not. Your first challenge would be, can you break the paradigm? That is your first challenge. Can you break that paradigm? And he took almost a month breaking my paradigm. And one day he said, let me do one thing. Why don't you take a few days leave? I'm trading crude oil these days. Why don't you watch me trade it? So I took a few days leave. We were in his room and he was trading crude oil contracts, both the long and short side of it. And within a few days, he made more money, trading crude oil, sitting in his shorts, sipping his beer, than I made, digging tunnels for the whole month. And I was zapped. And I was very lucky. He taught it to me the mathematical way. I teach stock market the mathematical way. No emotion.
What do you mean by that?
I'll come to that. That you are, he told me, remember a few things about the stock market. Number one, stock market is all about probabilities. What is the market doing for the whole day? The market is trying to find the right price. It is trying to find the balance of the price based on all the information that is available to it, something that is known to you, something is not known. He said, your capital is limited, but the market's loss-giving capacity is unlimited. That means you have to decide your loss-taking capacity yourself, because if you don't decide your loss-taking capacity, the market will happily take all your capital. Right? And he said, in this market, you have only one friend. And if you lose him, you are out. And your friend is your capital. Your money, your capital is your best friend here. If you lose that, you are out. So, conserve your capital at all costs. Because if you lose it, you are out of the game. Second lesson he taught me is that every trade cannot be taken. Market is giving thousands of trades per day. There are 8,000 stocks in the system. Everything is going up and down. You cannot just buy it randomly. You need to have a scientific system for your buying and your selling. So spend 90% of the time researching your stocks, finding your stocks, timing your stocks. And instead of you running towards a level, wait for the level to come to you. If the right price of the stock is 221 rupees and currently it is at 280 rupees, don't rush to buy it at 280. Wait for it to come to 221. Either it will come or it won't come. If that doesn't come, someone else will come. Nobody ever loses any money by not taking a trade. You only lose it by taking it. So you have to be a winner. That's what he taught me. You have to be a winner before you enter the trade, whether it is a long-term portfolio of 25 years or whether it is a short-term trade of 2 hours. You have to be a winner before you enter. If you are not a winner before you enter, you can never be a winner after you. And I my favorite subjects was statistics and probabilities. The stock market is all statistics and probabilities, and you don't have to think what the common man is thinking. Think what those big players are thinking. Because these charts that you see, they are not made by you and me. They are made by the big players, the FIIs, the DIIs, the mutual funds. And they are in a business of making money. Please understand, they don't lose money. Where does the bank make most of the money? From FDs? No. They make most of their money from the treasury. Every bank has a treasury where aggressive intraday trading happens every day. They don't talk about it. Every bank has it. Okay. So, you just have to understand these charts. These charts have their own language. There's a line chart, there's a bar chart, there's a candlestick chart, there's a Heiken-Ishii charts, there are intraday charts, there are swing charts. But you can learn it. You learn geography, you learn history, you learn trigonometry. Some of you will learn Sanskrit and other languages. Do you use them anyway? History kidhar use hoti hai? This will be a useful one. That's what I always say. So learn it and come. Hardly anybody trains themselves scientifically and come here. I've seen people doing shortcuts and trying to come here. Don't take a shortcut. Either don't come here or come here properly. Don't lose money here. Create incomes here. That's what my mentor taught me, and I took it seriously. So I learned under him for about 3-4 months in Sri Lanka. I was stationed near Kadutara, Kokleganga hydropower project there. Then he went back to Sweden, and I was transferred to South America, Peru. And there I enrolled myself in an online course of Pristine Academy. They're still there. And I think that was a very good decision of my life. I remember at that time, I paid about 3 lakh rupees fees. I'm talking of the year 2003, 2004. And I think that's the best investment I have ever done in my whole life. Because my whole life changed after that. Please understand, life is all about your decisions. What decision we take is with what is the life that we. So I enrolled myself into that course, started learning it more structurally. And within a year, I was making about 10% a month on my capital. That was very motivating. I had never, for me, what was my benchmark? I remember at that time, FD rates used to be about 11-12% a year, 2003-04. And that was my benchmark, 1% a month, that was my, and I started getting 10% a month, trading derivative options. There is a 12-hour time difference between Peru and India. So after my job, I could trade. My family was in India at that time. So I knew that this profession was for me. And I want to do this as a full time. So I started toying with the idea of taking it as a full-time profession. By that time I was married, we had 2 boys. And my elder one was approaching about 6 years of age. And I knew schooling would be a problem. I was in hydropower projects, always remote. Schooling was a big issue. So 2006 end, I came back to India. I decided to take it with my father, very strict man. So I went to him, I said, let me give him the good news first. I said, Papa, my project is finishing in Peru and I've been transferred to Scotland. He said, very good. He was very proud I was traveling country to country. Then I said, but I don't want to go there. I said, then what do you want to do? I said, I want to come back to India and become a full-time stock market trader. Luckily, I was sitting about 5 foot away from him. He was really angry. My son, a gambler. When did you start it? Do you drink also now? I said, no. It took me 3 days to convince him. And finally he agreed. But he had a small deal. He said, try it for 3 years. If it doesn't work, please promise me that you will go back. I said, that's good. With the grace of God, I had enough savings. At that time, I used to make about 2.5, 3 lakh rupees a month US dollars tax free. I'm a geotechnical engineer, it's a very paying field. So I said fair deal. So in February 2007 I came back to India, became a full-time trader. It was this market, kind of market you are seeing now. This was the Lehman Brothers. So 2007 was easy, a simple moving average crossover could make you money. Then came 2008 and our market crashed. Most of the people lost money. It turned out to be my best year. I normally trade my derivatives more in the short direction. Because short direction, they always give more money. And that is the direction most people are not trading. I remember in 2009, we had Satyam. So Satyam, before the scam happened, the technical charts always show you first. The charts will always show in advance. I knew there was an issue. So I had taken a short trade in Satyam. I bought a put option for 5 rupees. I remember. And I bought a few put options. My target was 10 rupees. About 10 to 15 rupees. If it reaches, I'll get out. And the day the scam happened, I was in a meeting. And my staff gave me a call. He said, "Sir, Satyam scam has come. When you have a put option, and you hear the word scam, you dance." I said, "What is the price of my put?" He said, "The price of the put now is 105 rupees." I said, "Put the stop loss at 90 rupees, close it by the end of the day." By the end of the day, I could close it at about 110 rupees. Even today, every day. The day Yes Bank went down, remember, crashed. The put option of Yes Bank, I think, was up 4,000% in a single day. So look at how does it work? Leverage. It is a 100-time leveraged product. So if a 10% move happens, multiply 10 by 100, you will get a 1,000% move up or down. So that's why these are wonderful products, provided you can manage your risk there. And once you can understand them, it works. So it worked well here. So if you go on my YouTube videos, you'll find a lot of my live trading videos there. And by the time I was here, I knew I was not going back. I took my ledgers, bank accounts to my father. I said, "This is what it is." So he looked closely, long time, put his head up and said, "Mujhe bhi sikha de." That's the best compliment you can get, on this one. So, and then I started facing a problem here. Since I was trading alone, I said, "I'm not growing as a trader further. I've learned a lot." So I called Jeffrey. He said, "Why don't you start coaching others? Why don't you start mentoring others? Please do it with live money the way I did it, so that there is a pressure on you to perform. Anybody can teach with you." So from 2009 onwards, I started teaching by live trading my money in front of others, and I normally use a capital ranging from 5 to 15 lakhs, because that is the capital most people bring in if they have to take the market seriously in intraday. So then this one here, so I started teaching live trading. Very soon a few thousand people had come. I taught, and then an international company approached me. They said, "Can you give us some consultancy?" Somebody recommended my name. So for about 1.5 years, I gave a consultancy to this international company. Met some wonderful traders, और जो मेरी trading में kings थे वो निकल गए. And by that time, I still had that small psychological issue, an urge to be right. And one of the traders here taught me, till the time this urge doesn't go out, you don't become a very good trader on this. So after being with them for about 2 years, I said thank you to them, started working on a mentoring model of my own. This is John Bollinger, inventor of Bollinger Bank. This is my company, pathfinderstrainings.com. I'm the owner of this company. It exists since 2007, a 12-year-old company. Then I had my first mentoring batch. I have a mentoring program. I don't have a training program. I've got a mentorship program, where the aim is that it is a hands-on experience for you, not a theoretical thing where you are regularly trading and investing with me and regularly learning by live trading with me. This is the first batch that passed out in December 2012. Since then, a lot of batches have passed out. You learn and you earn. So what do you have to learn? I always say this is the first one. Take this in your own hand. Don't let anybody else build your portfolio. Don't ever let anybody else build your portfolio. Take this in your own hand. The rest will fall. Don't ever give your money to anybody. Don't look for shortcuts. Make money with intraday trading. Catch market swings with swing trading. Price moves from one level to next level. These days, intraday and swing trading has become easier because most of it is done by algorithms now. In India, 60% of the short-term trading is algo-based trading now. And those algos are programmed by human beings, mostly on levels. And with technical analysis, you can identify the levels. And if you can identify a level, let's say from 314 to about 375, you can just let the levels go. And almost 70% of the time you will make money. So make sure you learn intraday and swing properly and trade both sides of the market. It's a skill. Anybody can learn it. To trade, you should know what to buy, when to buy, how much risk to take, and when to get out. This is the skill set requirements. What do you have to learn? Fundamental analysis in detail. Then technical analysis. Fundamental analysis will tell you what to buy. Technical analysis will tell you to time it properly. Timing is everything when you do technical analysis. Stock filtering, like I just filtered for you. You cannot open 8,000 stocks every day. It is impossible. So you have to learn filtering techniques by which you can filter the stocks fundamentally, also filter them technically. So that in the morning you have a list of 10 stocks in front of you, out of which when the market opens you see based on your candle patterns, which one is the one you will be going into. Risk management is the key, mastery of online platforms. High probability trading strategies. In the classes I will be teaching you more than 35 strategies. One is not good enough. You have a trending market, you have a non-trending market. You have a volatile market, you have a sideways market. You have a gapping market. You have a reversing market. There are 10 different kind of markets. For different kind of markets, different strategies will be required. You have to be ready with all of them. A trading plan aligned to your personality. Rational. This is the key. Rational. वो पहाड़ों में लिखा होता है ना, सावधानी हटी दुर्घटना घटी. This exactly happens in the stock market when you become emotional. I have many traders. I say, how did you lose this money? Sir, मैं emotional हो गया था. Why were you emotional? It is real money on the table. You have no business being emotional. So, and how do you remain rational? You remain rational when you have a set of rules by which you trade. It will either give you profit, it will give you loss. As long as your profits are bigger, your losses are smaller, you will do fine. Here I just demonstrated to you. And anybody and everybody can do it. And each one of you will have different capitals and different risk-taking capacities. money management, managing emotions and your subconscious mind. These are the batches that have passed out from December 2012. I started doing batches. Earlier it was mostly in Mumbai. Later on I started traveling out and I do courses in Hyderabad, Bangalore, Delhi, Pune. I think this is the third course that I am doing now. So I come into a city once a year, since I travel at least 12 to 15 cities in a year. So in one city I normally come, once in a year. I just finished Hyderabad and now I am doing Pune. These are the various batches that have passed out. All kind of people come here. My youngest student is 12 years old and my oldest student is about 77 years old. Mr. Singh, first batch. Okay. 77. So, everybody wants money. So it is basically there. Let's talk about the mentorship program that I run. So I have a 6 months of a mentorship program in which you will be trained as an investor and as a trader. Two skills you have to acquire and both needs to be interconnected. In this class I see almost 50% of the class is beginners. So the class starts from absolute zero. Let me tell you the model, how it works. It's an interactive model. First, you come into a 3 days of live classroom training. I always start with a live classroom training of 3 days. 9 in the morning till 4 in the evening. In Pune, it is coming on 20, 21st and 22nd July, coming month. 3 days of classroom training. So you will have 3 days of classroom training where I'll give you the concepts, methods on Saturday, Sunday, and on Monday with whatever I have taught you, I will live trade in front of you so that you know how to apply it. If I have taught you a technical analysis concept, I will apply it into the market. I also know that whatever I have taught you, you might forget some of it. So I'll also be sending you a recording, pre-recording of the sessions so that all those concepts can be revised again. So first 3 days of classroom training plus 2 days of recorded session. This will prepare you. I will demonstrate in front of you all that I have talked in brief right now. There I will be talking in detail. And then once you are done with this, normally it takes, after this, I give you about 2 weeks to listen to the recordings. In the meantime, you can open your trading account, demat account with whatever broker you want. Your broker is your choice. Then the live trading sessions start. This is where your skill will develop. So first and third Wednesday of the month, 9 in the morning till 3:30 in the afternoon, you will live trade with me. After the first 3 days, it will become an online course. First 3 days are physical, then the course becomes online, which you can attend from anywhere you want. In the live market, 9 to 3:30, and this you will do for 5 months. That means you will have 10 live trading sessions with me, each of 6 hours. 60 hours of live trading with me, which is good enough for you to practice with me. How does live trading work? 9 o'clock in the morning I start. We first filter the trades, find out which one do we have today for intraday, which one for swing, and which is a good stock for your long-term portfolio. In fact, in the first 3 days itself, I will teach the fundamental analysis by picking up your stocks from the portfolio and seeing whether they are fit or not. So this is live trading that will happen.